Okay, in this video, I'm going to talk about corporate governance with more specific reference to auditing. So I'm using Western Cape September 2022, the prelim exam of Western Cape September 2022. So if you check here on question 1.3, it says you're provided with an extract of the audit report from Clay Brick Limited for the financial year ended 30 June. Identify the type of audit report that the company received, give a reason for 2 marks, explain why the auditor referred to pages 10 to 25, then IFRS in the Companies Act, and name any 2 other items that can be used as audit evidence. So what I'm going to do to respond to this, I'm going to actually go through the audit report, and I'm going to talk about things that are included in this audit report, including those that have not been tested in this particular question. So the first question that you can get as part of auditing comes from the very first part there, which says to the shareholders. So they can ask you and say, why is the audit report why is it addressed to the shareholders, right? So that's possibly question number 1 that I can give you there. Why is it addressed to shareholders? So this is a question that you can get in some papers. Why is it addressed to the shareholders? So the answer there is very simple. The shareholders are the owners of the company, and they are the ones that appoint directors. So they are the ones that appoint directors. They also appoint auditors. So auditors must obviously report to the shareholders, because these are the owners of the company. So the shareholders are the owners of the company. That's first thing. And then the second thing, they are the ones that appoint auditors. So the one that has appointed you is the one that you need to report to. So that is the first question that can be asked. Why is it addressed to the shareholders? It is because the shareholders are the owners of the company, and it is because these auditors have been appointed by the shareholders, right? And then we go on to read the basis of the opinion. We conducted an audit in accordance with international standards on auditing. Why do they refer to international standards on reporting? So why international standards on auditing, or international financial reporting standards, or why would they sometimes refer to the Companies Act? Right? So this statement is just designed to show that this auditing has been done consistent with standards that are acceptable in the auditing profession internationally. And it also helps, especially when you bring in IFRS as well, it also helps to ensure global comparability of financial statements, because it's also an indication that these financial statements are prepared using acceptable international financial reporting standards. And they can also say the Companies Act is part of that. Why the Companies Act? This is the law governing the way companies are supposed to operate in South Africa. So they can ask you why international standards on auditing, why international financial reporting standards, and why Companies Act. So this one shows you that they've used acceptable international auditing standards in order to make sure that they pass a fair opinion. And then international financial reporting standards allow you to be able to compare companies in different countries, in different industries, to compare their performance. And then the Companies Act is actually the governing legislation or the law that governs how companies in South Africa are supposed to operate. Now, and then if we go further to that next paragraph, we are independent of the company. Why do they show that? They want to show that they are independent of the company. In other words, they don't report to the directors of the company. Now, is applicable of performing audits and with other ethical requirements as per professional code of conduct, the audit evidence we obtained was sufficient and appropriate. Now, they can also ask you, what is audit evidence, right? What examples can they give as audit evidence? So as number 3 there, you can be looking at audit evidence. What can the auditors give as audit evidence? So maybe audit evidence can be in this form of source documents used to record in the financial statements. Audit evidence can be in the form of external documents, like your bank statements, like your creditor statements. Audit evidence can be in the form of external verification. You want to verify verification externally. You want to verify some figures by getting maybe the creditors to send in verification to ascertain that figures that you've been given, it's what is actually owed, or maybe using estate agents to value some of these financial, some of these assets that you might have, especially your fixed assets. All right, now, and then they say, in our opinion, the financial statements fairly present in all material respects the financial position of the business at year-end, the financial performance of the cash flows in accordance with the International Financial Reporting Standards and the Companies Act. So now, the next question that you normally get is type of report. Type of report. So the report can be unqualified, which is a good report. The report can be qualified, or the report can be a disclaimer of opinion. So in this particular case, this was an unqualified report because the auditors did not see any material misstatements. In other words, it's a good report. There were no material misstatements. There was no mistake that they discovered. If the report is qualified, how do you know that it's qualified? They will normally put an except for. If they use except for, then you will know that this report is qualified. Now, but if it's a disclaimer, the auditors will not express an opinion at all. Okay, now this one, if I come back to this question, I think there's only one that I didn't answer here on this particular paper. They want to say, why do they refer to pages 10 to 25? Right? Why are they specifying pages? So in other words, the auditors are only responsible for the pages that they've specified, right? Why is that so? Normally you'll find that from page number 1 to page number 9, you might have a director's report, right? So the director's report can be found in excluded pages. Why? Because some of the information contained in the director's report, there is no, it's not easy to verify some of the information that they may be passing through. But not only that, you might not have a direct financial standard that actually shows you how you are supposed to audit a director's report. So the auditors ultimately are going to be responsible for the page numbers that they've specified. And in these pages, that's where you find your income statement, that's where you find your balance sheet, that's where you find your cash flow statement, in those pages that have been specified, and they are responsible for those pages 10 to 25 that they have audited. So to just verify before I close this video, if I've answered everything here, identify the type of report. We said it's unqualified. Page numbers I've explained. International Financial Reporting Standards and Companies Act I've also explained. And then any two things that can be used as audit evidence, I've also explained that. But I'm going to have another video where I give you all possible questions that you can get on auditing.